Okay, welcome back to Infinite Investors, the home for all new and non-investors. I'm Curtis, and today I'm going to show you the three stocks that I bought myself for Christmas. Look, I showed you guys my 2020 vision. I mentioned how I'm going to try and be a little bit more aggressive with my portfolio and try and introduce a few more growth stocks. So if you guys saw my last portfolio update, you guys would know that I bought PayPal, Okta and Uber, and I'm just going to give you a little bit of an insight, a little bit of an overview into why I bought some of these stocks and what my plans are for the future. So if you want to know more, please like, please comment, please subscribe, help the channel get to 3,000 subscribers, and we can get the world of investing out to more people in a clear, simple and transparent manner. But first, let me get the disclaimer out there. Anytime I'm talking to you about stock purchases that I've bought, please understand that this is obviously my purchases from my portfolio with my attitude to risk and me knowing my own financial situation. So do not see this as advice. Do not see this as me informing you of why these stocks are good stocks or bad stocks, etc. They could actually all perform terribly, and it's a risk that I'm willing to accept, but obviously I wouldn't want you guys to take on the risk unknowingly. So just take this information with a pinch of salt basis, and always do your own research when you're looking into your stocks. But I'm going to start with the least riskiest for me, and that is PayPal. Everyone knows what PayPal is, and I'm here on Simply Wall Street, and you can just basically see obviously the PayPal movement. You can see how good the movement has been this year. You can see they've had a 40% return over the last year. The US IT industry has had a 51.7%, which is a growing it's growing for the sector, which is great. And obviously the US market has had quite a bullish market as well. And then in terms of, let me turn that off. In terms of valuation, you can see that it's slightly overvalued, but I'm going to talk a bit more about valuations when it comes to growth stocks in a bit as well. Future growth performance 16.1%, and then you can see down here, which I think is one of the most striking characteristics about PayPal, is their debt to equity ratio. And you can see that they've got a fantastic balance sheet with a little amount of debt. One of the things that really attracted me to PayPal is some of the businesses that they've acquired. They've gone on a recent rampage of acquiring, and when I say recent, I mean recent history. So we're talking probably the last 3 to 5 years. They've been acquiring loads of companies in all different regions of the world. One of the companies that they've acquired is Venmo. This article was published on the 31st of January, which obviously saw an 80% increase year over year with Venmo. When we look at this article, which is now, we're talking about April the 24th, so a few months onwards, we can actually see that total payments volume for Venmo grew 73% year over year to 21 billion. In the first quarter, Venmo is on pace to do 300 million in revenue this year, PayPal CEO Dan Schulman says basically. And when you look at this from Statista, you can actually see the growth of Venmo from Q1 2017 through to Q3 2019. And, 1 in 6 US citizens, I think it's got 40 million users now, and 1 in 6 US citizens use Venmo either as to pay for online purchases or for a peer-to-peer platform as well. Now, you've got other businesses that PayPal have as well, including Braintree, and I'm really excited about businesses that have a business-to-business interface, because generally those businesses see a lot more in terms of cash flow, a lot more in terms of revenue than business-to-customer enterprises, and I think they generally have a bigger chance or a greater chance of potentially doing well. So that for me boded well for PayPal. But also, their last earnings was really good, when you can see that revenue of 4.38 billion growing 19% as well in their third quarter earnings. You can see GAAP, which is generally accepted accounting practices, EPS of 0.39 and non-GAAP of EPS of 0.61 cents, includes unrealized net loss of 0.15. There's no comparative amounts, but basically it went up. I think the comparative amounts are down here, but I'll leave the links in the descriptions. So on that basis, I just felt that PayPal actually was one of the safer options to basically go for. Now onto Okta. Now Okta's revenue is forecasted to grow 23.34 year over year. My attitude to growth stocks is not necessarily that I'm going to hold them for the next 5 years. It's that I want to realize a bigger percentage gain, definitely for 2020. And then obviously I will review the state of play and what I'm going to do for years going forward. But you can see Octa's had an incredible rally. And one of the things is that a lot of people are saying that Octa's overvalued. So you can see the 119.7% return in the same growing IT industry, but from an overvalued status, people are saying it's a little bit overvalued. I've learned not to take the overvalued metric into too much consideration, and why I wanted to talk about it specifically for growth stocks is that growth stocks typically are always overvalued. When you look at the price to earnings, when you look at their price to sales, typically with tech stocks, with growth stocks, you're going to find that they're always going to be overvalued. So how much reading you take into this as a metric is completely your call. But for me personally, I think I've learned to be less risk averse as I was previously last year, and actually, try and have a higher tolerance to risk, I suppose. You can see that the future growth, you can see, let me just show you something, 0.9%. Now, the reason why this is 0.9% is because this is based off earnings. And to be honest, they're not expected to make a profit. So this is a loss-making business. And we've seen over the course of 2019, there's probably 20 names that I can mention of loss-making businesses that have done extremely well. So just because a company is making a loss, it does not mean necessarily that they're not actually going to grow. Their financial health, they can see they hold a lot of debt at the moment, which is a risk, and that's something that obviously should be considered. And obviously, there's no dividends there, but their balance sheet holds a lot of debt on that. There's a lot of conflicting views from a Wall Street standpoint. You've got about, I think, 13 analysts predict it to go up. I think another 7 neutral and another 10 down. I think Okta is one of those stocks where you're going to just have to make your own call. Again, this for me goes into the whole business to business side of it. When you look at actually Okta's customer base, and you can see the likes of Adobe, the likes of Major League Baseball, MGM Resorts, 20th Century Fox, Hertz, Priceline, NASDAQ, Priceline owns Bookit.com and all of those other travel companies, USA Today, like they just have a client Experian, Western Union, they have an absolutely phenomenal clientele, and that can only really grow. They're also in a growing industry. The whole cybersecurity industry and the cybersecurity sector is a growing sector, and I think Okta is quite firmly placed to be similar to the way Tesla is for the electric vehicle industry. I do think Okta for the cybersecurity, or not necessarily the whole cybersecurity, but at least the identity access, the single sign-on, and some of the other products that they're doing, I think they're really well poised. But you can see the market is expected to grow from 2.5 billion this year to 6.5 billion by 2024. And because Okta's loss making, if they can start to use some of these revenues and turn a profit, then I do think that they have a good opportunity. Now, I did have somewhere their earnings, and I'm just going to put, I don't know, Okta, I don't know why it's not up. So forgive me for this. Yeah. And I know the bottom line, I think, with Okta for me is that it's a bit more of a risk, but I think for me the risk is about how much do I think Okta is going to grow over the coming years. So you can see in the third quarter earnings, total revenue was 53 million, an increase of 45% year over year. Subscription revenue was 144.5 million, an increase of 48% year over year. So they are increasing, they are growing, and if you go through all of this, you can actually see that they are growing. They have started to reduce their losses. When they give their financial outlook for 2020, they've given quite a modest outlook, which is what I really liked, because if they gave quite a bullish outlook and they fell short of it, then we know that analysts will say, or the stock market will say, you know what, Okta didn't hit their estimates, so the stock is going to go down. So I think by giving quite a modest outlook in terms of we're going to grow 1% in this place, we're going to grow by 1 cent a share this place, or we're going to reduce our loss by 1 cent a share in this area, I think that was quite a modest and quite a reasonable approach. And so I'm hoping that if they have a good quarter four, this could really spike their growth. There are some expectations that the Okta stock is going to hit around the $153 mark, $155 mark, which represents probably about 20 to 30% growth or something like that from where it is at the moment, maybe about 25% growth or something. So I think, and that's for definitely next year. So I think, it is a little bit of a risk. I would definitely say I'm going in the levels of risk at the moment. But, just look at what's happened with Tesla. Just look at what's happened with Apple. Just look at what's happened with many other tech stocks that are considered to be overvalued, and originally weren't even making a profit. They seem to be doing well. So that's the reason why I'm taking a little bit of a punt with Okta. The third one, which I think for me is slightly the highest risk, is Uber. I decided to invest into Uber because, one, I felt that the share price is completely depressed. Look, I didn't get into it in IPO, which was the wisest decision. I don't believe in getting into any stock at IPO stage, but I do think that you should constantly review a stock into sense of, actually, does that stock pose some form of growth opportunity within the future? Now, one thing that Uber done really well is that they sold their Uber Eats businesses in India, or they're planning to sell it, which has helped them have a little bit of a rise recently, as you can see here. And they're going to sell that to Zomato. That's going to free up some cash, which therefore they can then reinvest into other areas of their businesses. They've actually put a $200 million investment into their freight business, and obviously from their freights business they expect that to be one of the main driving factors over the next 2 to 3 years. So when I'm investing in Uber, I'm actually thinking a little bit longer than 2020, just because I think they're going to have to it's going to take a bit more for them to actually, turn that around. But when you look at some of their numbers, their loss per share of 68 cents versus the 81 cents expected. So they did make less of a loss, even though they had that massive compensation payout that they had to do to a lot of their staff members. When you look at their revenue, 3.81 billion versus 3.69 billion. So they are generating a lot more by way of revenue. Obviously, they are making a loss, and that is something that does need to be known. But I think from that standpoint, there's some opportunity here. When you look at it, some of their actual individual business lines, revenue for Uber Eats, the company's food delivery service, was up 64% year over year, clocking in at 645 million last quarter. Revenue for the segment came in at 595 million. Uber Freight grew 78% year over year, coming to $218 million for the quarter. Uber's most established segment, rides, grew 90% year over year to 2.9 billion. So look, they are still growing from a revenue standpoint. I think it was right that this stock got depressed because of their extremely high valuations at IPO, and they're not making a profit. And I do believe businesses should try and make a profit. But at this current juncture, as an investor, I'm looking at Uber and thinking, you know what, you're really undervalued. You're at a price of $30. Could you get to $50? Could you get to $55 by the end of the year? Is that unreasonable? If that's not unreasonable, then actually I'm going to be making an 85% return. So for me personally, is it worth taking a bit of the risk, taking a bit of my equity, and actually putting that into Uber? And that's one of the reasons why I did that. So yeah, these are the 3 stocks that I bought for Christmas. There's many other reasons and other factors and things to look at when you're buying stocks. And like I say, depending on which stocks you're buying, there's even different things that you might want to be looking at, because if it's a dividend stock, then you need to be looking at all of their dividend metrics. If it's a value stock, then you need to be looking at the undervalued. You need to be looking at some of the history and the price to earnings and some of those other factors as well. But with some of these growth stocks, I think you are in some respects taking a bet, and you are placing a bet that actually this is a growing industry, it's a growing business in the growing industry, and actually it's going to be one of the pioneers, and it's going to own this space, and actually you're going to realize some potential over the next year. I think also I always talk about looking at the macroeconomic landscape when you're talking about businesses as well. And one of the things is that over next year, we know that we've got the US election situation. We can see that with this whole Trump impeachment saga, this Trump impeachment situation, we know that he's not going to get impeached. I mean, he's been impeached, quote unquote, but when it actually comes to, the fact that will he actually be removed from office, that's not going to happen. He's still going to run for 2020. And I think, the way the US market has gone over the last couple of years, people see that Trump being in office actually is seeing growth in the US market. There might not be a recession, and if Trump gets into office again for another 5 years, then I can see a lot of these businesses still continuing to grow potentially, just because of the macroeconomic landscape, not necessarily because those businesses have done anything. And we've seen that behavior replicate itself in the UK when certain people like Boris Johnson stay in office, and Labour don't go into office. We see what that does does for stock prices. So, you know, I think I'm still bullish really on the US market. I know a lot of guys are sort of a bit more bearish, and they're actually being a bit more cautious, and that, you know, that's very wise. And I think you've got to take the information that you've got and then work out what's best for you. But me personally, I'm still a little bit bullish. That's the reason why these are the 3 stocks that I bought for Christmas. And yeah, it will be interesting to see what happens over the course of 2020. If you want a very, very quick portfolio update, I'm currently sitting at around a 10.6% return. So, you know, I'm hoping over the next 12 months we see that number steadily rise. So we shall see. But yeah, hopefully you found this video interesting. If you did, like, comment, subscribe, and I'll catch you next time with another investment video. Peace.